guys, it's Doc's Market Minute for Thursday, November 5th. I'm looking at the S&P 500. What an amazing move that we've seen here, about 250 points so far, and it shows absolutely no sign of letting up at this point. And a lot of that is because we have bears that are still covering, number one, and number two, people with bearish positions that are out of the money right now that are hedging like crazy, and they're buying long deltas through either long stock or futures contracts, and it just keeps pushing the market higher because of all that hedging activity. This is why pinning occurs. Now, let me show you something here on the shorter time frame charts. A lot of times we don't spend any time looking at these off to the right. So we have the monthly, weekly, daily, and then we also have a 78-minute chart, which is 5 times faster than the daily charts. We have this series of 5 here, a factor of 5 between them. And we don't often go down to the 78-minute chart, but this is what's driving the market right now. This is the sort of stair-stepping mode that we're in, where we break out, we consolidate for a couple of days, break out, consolidate, and here we go again. And this is being keyed off of this 78-minute chart. So when we have the 78-minute chart going into range contraction here, builds up a lot of energy, and it's just enough to push it up incrementally to the next breakout point. When that hits exhaustion, the S&P will consolidate, go sideways, and we're also seeing it obey this trend line that's playing in at this point. Now, this will continue indefinitely until we start to see something happen, which is a change in polarity on this smaller time frame chart. So right now, obviously, we're seeing higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and when that pattern changes with probably what's either going to start with a lower high or initially a breakdown through this channel trend line, right? And so that creates a lower high, lower low. That will finally start pulling down the daily chart, and then we'll go into a long overdue consolidation here. Probably will last for a few weeks, but that doesn't mean this thing has to stop until it wipes out nearly everybody on the bearish side of the ledger. This is the way that markets move when something is so obvious as these resistance lines here that are overhead. Markets will often take the step of wiping out that obvious move and move in an unconventional fashion. Remember, markets will move as far as they possibly can in one direction before they then turn around and move as far as they can in the opposite direction. And that's what we're seeing right now. So watch the price action. Indicators are not really going to help you in this type of market. Watch and understand those smaller time frames. Watch for that change in polarity at the smallest time frames and watch it propagate upward as a sign that at least we're going to be taking a rest on the S&P going forward. Until that point, I wouldn't see why this thing is not going to continue higher until at least tags the May high point in 2015. That's it for today's Market Minute. Thanks for listening, folks. We'll see you tomorrow.